SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at Bitcoin, crypto, the market, and I suppose that we can speculate on what could be a miniature alt season. There's reasons to back that up. I don't know what other YouTube channels say. Obviously, I don't watch them. But there's a potential for a bit more continuation for alts, despite some of these alts. We were looking at them on the live stream last night for Patreon members only. We were looking at some of these coins had done like 300% or so, and they still look like they want more. So I know how it sounds. It does sound pretty crazy. But let's start from the first domino. I'd like to talk about dominoes, and the first domino being Euro, and obviously the impact that would have on the Dixie and blah blah blah, domino effect. So we got a sizable pullback yesterday on euro dollar, right? Excuse me, I'm a bit croaky this morning. This is to do with the jobs numbers, and so it gave a bit of strength to the dollar rather than weakness to the euro. It was more strength to the dollar, and we started to see this coming down a little bit now. There's a handful of areas to watch on this. First one is going to be the 200 simple and exponential on the 4-hourly. We're not far from that already. Again, this is the weekend, so this is all closed now. So this is going to allow for crypto to maybe have a little life of its own over the weekend while Bitcoin holds at its current value. But as soon as Monday opens, I would favour a further pullback into this area, the 17.5. And that's your 200 exponential. That'll be a second retest of the golden cross that took place on this 4-hourly. Now, if that breaks, which it could, we could get the Holy Grail retest of some of these lower zones. And again, a closure like we saw yesterday below the Bollinger Band center would favour further pullback to at least the Bollinger Band bottom, 107.2, maybe the 50 exponential, 106.6. Again, these are all going to be trending up as well as we open on Monday. And maybe even the fullest of full Golden Cross retests, which pulls us all the way back to about 105. Now, all of this is backed up by the bearish divergence that we've had now. And again, this isn't a change of momentum, generally speaking, across the board for what is a considerable uptrend backed up by moving averages. It would be a retest, a bullish retest is how we'd like to interpret it to begin with. Obviously, losing this area, parity and below. It's that simple. There's no reason for that because, again, fundamentally, we've got the Fed raising rates. Last one was 0.25. They might even have a pause. They might go 50. Who knows? But they're not likely to outperform the ECB, who have prescribed already, ages ago, they've said, we're just going to do 50 basis points every single time. So with that kind of fundamentals involved, that would explain the strength and continuation of the strength of the euro-dollar chart. And again, the way that the Dixie is going to be held down. Now, people are looking at this, and I was looking at this, obviously, as the next area of resistance. So we seem to have got it on the S&P. Again, the correlation between the S&P and the euro-dollar, obviously, is high, as everything is high. This is why we work our way back through these dominoes before we even start to look at altcoins, which I'm honestly telling you that's where this video is going to end up. I promise you that. But we're looking at a rejection at this area. No big deal. We broke out of a giant bear market descending triangle, and now we've found ourselves a new level of resistance, which is outside of the triangle. So what we'd be thinking about would be a pullback maybe to the breakout zone. I'm basically going to say it as simple as this, really. Provided we stay above 4,000 the S&P, we're likely to continue with an uptrend, right, for stocks. If we go back inside the triangle and back down below all these moving averages, which are just below 4,000, yeah, we trend down again, and maybe we double bottom somewhere along the lines sooner rather than later. But for the moment, I'm bullish on the S&P while we're above 4,000, which again is the descending triangle and the majority of moving averages, which are all starting to cross outside of the triangle now, adding more weight to the fact that this area is a very significant support, and it's a flat number as well, 4,000. I remember when I said that this isn't a likely bottom. I watch Bloomberg while I do my ironing sometimes, and everyone was saying the idea, the concept of it going to 4,000 from here is completely unrealistic, and blah 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 blah. People were wide-eyed and shocked at the idea of that, and then we went straight up there. That's where we went, and we were coming down. People were saying, "Oh, we're going to break down even further, go to a new low." No, we didn't. We went straight back up to the top of the trend and then we broke out. So it's all working quite nicely. So let's think about Bitcoin very briefly, and then we'll talk about altcoins. So as with this is the weekend, obviously traditional markets aren't open. They finished down, they closed down, and I expect further down for them. Although I am not bearish on them. I am looking for bullish retests of lower zones and then springing back up again to make new highs. Well, not new highs, but new local highs. Consistent with their current uptrends. Bitcoin can do either or at the moment. At the moment, we're at a very significant area of support, the 23,300. Look, we can bounce from here and go on to make a new high. That can happen. That can happen today, right? I'm not saying that it's going to, but it could happen today. It doesn't look like it wants to do that, to be honest with you. It does look like it wants to move down to a significant, much more significant area of support, being that previous box, the 21,000, where it begins, 21,500 to 20,500. So that's a maximum of about 12% drop. And potentially more or less an 8, to that level. We'll call this a buy zone, really. Now, this could very easily be a trap, but as far as the weekly is concerned, it doesn't feel quite like a trap, to be honest with you. When you base it on the weekly's momentum continuing to drive up, the money flow index continuing with its uptrend, no bearish divergence of any form on this. In fact, if anything, it's just brewing a larger move later on down the line, not immediately, but later on down the line. Bring it back to a 4-hourly, and we see that momentum is sort of dwindling down in the form of a consolidation, which does favour further downside, maybe down to those levels. And obviously the daily is saying the same kind of thing as well. So I'm not looking for massive catastrophic breakdowns on any of this. I am looking for this area to give up. 23,300. Maybe we have a little bit of a pit stop around 22,005. But I think if we start to make our way down to that level, I would see 21,500 get met. I think that's most likely to be the case, especially with the way that traditional markets have closed down. Now, you might think that that's bad because I'm talking about downside, but I'm not. I'm talking about buy the dips. And if we focus on something in the very short term and also the opportunities that might come about if we come down to this level, we can think about altcoins, right? So rather than looking at individual altcoins, let's think about this. This is your Bitcoin dominance chart without any of the indicators on, really. Let's just focus on the chart itself. There's no point of it being on a 4-hour. You might as well put it onto a weekly. The weekly, we're looking at a closure so far below 44% dominance. This is a potential small alt season, so continuation for altcoins down to at least 42% dominance, and maybe even a little lower than that. Let's face it, all markets are quite bullish at the moment. People are very happy to expose themselves to risk. Altcoins have gone crazy. They can still go crazier. The money flow index on Bitcoin is not overheated, so we're not looking at a big bubble pop. We might be looking at consolidation like we just showed of about 8 to 12% maybe, and that would obviously be emphasized by altcoins. But the picture that I'm seeing right now is one of continuation of almost pretty much immediately, and especially if we pull back into those zones, altcoins would be a great place to buy. And if we're thinking about the buy, hold, stake scenario, that might be the time to do it. Obviously, no one buys the bottom, no one sells the top, but you'll be close to a bottom in the grand scheme of things. If you're looking to buy and to invest for a period of 2 to 3 years, it seems reasonable to me that would be an okay opportunity to do that. But remember, it's going to be a bumpy ride. Altcoins especially is always going to be a bumpy ride. Now, Bitcoin has likely found its low. Altcoins can always come back down and lower. It sounds crazy, but it's true. It can happen in a Bitcoin uptrend and a Bitcoin downtrend. So just be aware of all of that. But reasonable area to think about buying it for a short term and long term would be on the next pullback into 21,000. But again, I'm not telling you to do anything. I'm not your financial advisor. So Bitcoin dominance, again, showing a picture of continuation immediately and possibly long term. This is total market cap excluding Bitcoin and Ethereum. So all the shit coins, really. Pardon my French there. So we're looking at a closure for the first time in a very long time above that 200 exponential moving average. We had one over here back in March 2022. Since then, we've not come anywhere close to it. And so what I'm thinking is that a closure, as we have seen here, and more or less an attempt to retest that, which is the 374 to 75 billion market cap with a pump signal involved as well. We're looking for a bit of continuation on this one up to the next level of major resistance, which is about 446 billion, give or take, you know. And again, emphasized with the with the pump signal on the Ichimoku cloud. So this looks like a realistic area where the small to medium caps are going to move up to, or basically all the other caps outside of the big boys. And that favors further upside for all of those bad boys. So we are looking at a move up for this, which would be decent moves for those altcoins in the short term and medium term, and again possibly for long term as well. So I'm not like I say prescribing everybody just buy absolutely everything that they can see. I'm thinking that this suggests altcoins have life left in them. And I said, you know, throughout the whole bear market, especially as this Bitcoin dominance chart remains so low, I did say I think this, despite, you know, the FUD that's been involved in things like Luna and all the other madness that has come about, and obviously the standard and natural retrace of altcoins to the tune of what 95 to 90 odd %. Yeah, I still think that this next market, this next bull run, is largely going to be driven by altcoins, more so than the previous, as the bear market kept the Bitcoin dominance chart at an extreme low. It didn't happen before. It happened this time. It's a different market, right? It's a different market. Altcoins aren't just altcoins. There's a lot of altcoins out there that provide utility and are being utilized by big players across the world for all kinds of reasons. There's plenty of scams out there, obviously, but they're not all scams. There is a future in blockchain and a future in cryptocurrency, as well as a completely separate entity being Bitcoin, which is what it is. So let's think about it realistically. I think this next bull market is actually going to be pretty good across the board. There are going to be some scams explode. There's also going to be some real utility providers that explode. So imploding scams, exploding alts. And I strongly think, I honestly, the way that it looks to me has definitely been a different bear market than previous. When we think about the money that's been sustained in altcoins, and technically a stronger market than Bitcoin as a whole, I think altcoins are going to be a great place to buy, hold, and stake. Anyway, I will leave it with you. There's not much more to say about this. Short-term upside potentially at this current level. We start to lose 23,300. Then obviously we keep our eyes down on the lower zones for Bitcoin, which is around 21,000 area, and we think to buy those dips. I say we. Obviously I just mean me. I'm not doing some kind of hypnosis trick on you to make you buy coins or anything. You do what you want to do. It's your money. Obviously, this is an extremely risky scenario, as is all markets. And altcoins are probably one of the most, if not the most, risky of assets anyway. So, you know, whatever you decide to put in, you have to be prepared to lose. But yeah, long term seems reasonable. Even the short term seems reasonable. And yeah, I'm going to prescribe I favor short term and medium term continuation for altcoins, regardless of what Bitcoin does. If Bitcoin comes down by 8%, altcoins might come down by 10 to 15, but then they will bounce higher than that once they've reached those levels. So making higher highs, higher lows, higher highs, higher lows, until, of course, Bitcoin does find a significant top, which I don't think it's done in the short term. I still think it's got a little further to go, but that doesn't mean that it can't consolidate or pull back with the S&P, with the Euro. And that, again, just to leave it on this has been the way that we wanted it to go. We wanted Bitcoin, we wanted S&P, and we wanted the Euro to all consolidate or pull back at the same time. Because if Bitcoin started to pull back first, maybe a few days before, made its way down to 21,500, and then we started to see the pullback on the Euro, which then brought the S&P down, it would emphasize Bitcoin's move and probably break that support. But it hasn't done that. We've got symmetry across the board. They're all coming down at the same time, which makes us able to try and buy dips based on the main domino, which would be Forex, which would be Euro. So if we see Euro find a bounce around these levels on the daily, so maybe 105 would be great. There'll be a buy the dip that could be expressed across all markets, and obviously the higher the risk, higher return assets like Bitcoin, crypto will probably yield you more. but we still focus on the first domino, onto the second, then the third and the fourth and whatever. Anyway, I'll leave it with you there. I'm pretty optimistic about this, despite the threatening, the threat of an 8 to 12% drop on Bitcoin. I'm very optimistic about the way it's going to go. We've been looking for a dip to buy. If we get the dip, we should be grateful for it. We should give it a go. I say we. I mean me, obviously. I mean me. And until I see you tomorrow, good luck trading this chart and all these charts, because traditional markets are the first thing we look at, and they are closed today. So crypto does have an opportunity to have a little life in it. We are at that major support, so just be aware of that. But whether we move up from here or down to these levels and then up, still a good scenario to find ourselves in. And overall, the market is looking so much better than it was previously, and so we should congratulate the market in turning a corner on a fundamental and on a technical basis. Things are looking pretty sweet. Anyway, thank you for watching. Hope you have a nice day. Take it easy.